All right, guys, these are 5 problems with IPO stocks. The last problem is the biggest one. Stay tuned. What's up, you guys? My name is Jose and welcome back to the IPO Nerd, the best place to learn about new companies going public and how to invest in them. America's #1 IPO news channel. So today I wanted to do a little bit of a different video. Before I begin this video though, I want to make sure that I put this out there. I'm not trying to discourage anyone from participating in IPOs. I mean, as you know, my channel is all about IPOs. I love IPOs and all that. But in the last couple months, they've been horrible if you're an investor. What I've been doing is I've been laying back and I've been catching them around $5 or below, you know, pretty much penny stocks. And I'm going to show you a couple of examples on this video. But the sentiment about IPOs, you know, it was great back in 2020 and 2021. A lot of people had money. The steamy came in, right? Everyone was playing the stock market. Everyone was buying these IPOs. And now it's just the sentiment is terrible and it's horrible. And people are losing money on these IPOs. And I'm going to show you why. So make sure you drop a like, subscribe to the channel, and let's get right into it. All right. So the first point I want to talk about is that retail investors like you and I, we get stiffed with higher prices when we buy the shares. All right. A lot of these companies like FedEx gives you shares, right? When you work for them, Facebook and all that. Back in 2013, when Facebook went public, a lot of the employees became millionaires because they already had shares that the company gave them for free. Right, so when most of these companies, when they go public, the shares are way overpriced. And there's a company that went out public last year. I don't want to say any names, right? But their company shares for their employees was like $2 or $3, and they were trying to sell it to us for $20, $30, right? So that's one thing that I see with IPOs. That's my first point is we get stiffed with a higher price and a higher EPS and a higher PE ratio or whatever you want to call it for shares that are going public when the actual value of the company it's not that high and it's not as much as it's supposed to be, right? So because prices in the stock market are driven by sentiment, right? Whatever people think the company is worth, most of these companies are going to be overpriced and nobody's really going to do their due diligence and actually look at the balance sheets and all that good stuff. So that's point number 1, prices are way overpriced. Point number 2, right? Not every broker allows you to participate pre-IPO, and this is a huge problem. Note that Fidelity does and some other Ameritrade and all that, but Robinhood only had so far about 23 or 24 IPOs that they participated in, and that's it. They have stopped, right? So if you don't claim your shares at the IPO price, let's say $5 or $10 or whatever, you are stuck with these shares, right, at whatever price they actually IPO. So a lot of them just fly off the hinges in a crazy way. We call it the IPO pop. Which brings me to my third point, guys, which is most of these companies, they IPO, they pop, and they crash, right? And we're talking about in a matter of hours and sometimes days, guys. And if you're stuck on a lockout period for 180 days, you stuck with those shares no matter what the price does. And here are a few examples. Here's the Yancey Education Technology Group, guys. This just IPO last week. And you can see right here that they were supposed to come out around $5 per share. And immediately, doesn't work. Immediately, right? Immediately. After they IPO, the stock price went up to $160 per share, guys. That is insane, right? So this is what we call a big pop and a crash, because now the share price is only $8.15. So this is something that you got to be very careful with IPOs. I will stay away from them if your broker does not allow you to participate pre-IPO. Go ahead, put in your limit orders. I myself put, my orders around $5. And if the share price goes below $5, then the purchase goes through, right? This is something that I point out in every single video because I think it's important for you guys to know before, you buy these IPOs to make sure that you know what you're getting into. AMTD Digital is another great example, guys. Now, this one took a few weeks before it blew up, right? But look at this. It was supposed to come out around $13 per share, right? If you were lucky, you caught them, right? But the price went all the way up to $1,679 per share, and I believe even more at some point. And now that everyone sold their shares, right? Boom. It's only worth $138 per share. So all I'm saying is be very careful when you buy these IPOs. Don't be in a rush to get into them. Don't try to cash them all the way high up here. Just wait them out, guys. Wait them out. If you're really interested in these companies, make sure you put your limit orders and just wait for the right price for you. You determine what's the right price for you. You, not the market. you. If you're enjoying this video so far, make sure you drop a like, subscribe to the channel. If you want to see what I'm buying every single week, make sure you go down in the description, join my Patreon. For some reason, the Teespring store is not available for some reason on my channel. It used to be, but now for some reason just is not available. So make sure if you want your merch, the link will be in the description as well. Thank you so much for tuning in. And let's go on to reason number 4. Reason number 4 is that back in 2020 and 2021, as you know, there were like about 3 or 4 rounds of stimulus checks. Now, people had money, right? And they were looking for a way to convert that money to triple it, double it, triple it, quadruple it, their money, and they saw that IPOs were a good way to do that. Now, that might have been the story back then in 2020 and 2021. It is not the narrative anymore, guys. Everyone's pulling the money out of the stock market. They're talking about recession here in the next couple months. If it's not happening already, we're already in a recession according to GDP growth. So a lot of people right now are not interested in IPOs, to tell you the truth, guys. I've seen a sloth in my growth as far as like my YouTube channel interest. I've seen a lot of lack of interest in IPOs, period. So in 2020 and 2021, everyone had their steamy. They were out there balling, right? Throwing that money at the stock market, buying all the new companies or whatever, hoping that they could catch the next Google, the next Apple, the next Tesla even, right? And that money now is gone. And Americans are back into borrowing money now to make ends meet due to inflation. So that is one thing that's happening right now. That is number 4 problem with IPOs at this time. And problem number 5, and probably the most important problem that you need to be aware of, is that the IPOs have underperformed S&P 500 as far as the Renaissance Capital IPO Index is. And I'm going to show you guys real quick right here what I'm talking about. All right, guys, so the Renaissance IPO ETF is a transparent rules-based ETF that tracks the Renaissance IPO Index, designed to hold a portfolio of the largest and most liquid newly listed U.S. IPOs. Now, I'm going to show you how this ETF has perform compared to the S&P 500. So when you look at it right here next to the S&P 500, you can see that it has underperformed the S&P 500. So people can just put their money in ETF, right, in the regular SPY ETF, and actually come out better than just like betting on single individual companies, especially IPOs. So you can see right here that the Renaissance IPO ETF is down year to date. This is year to date. All right, 43.60% down, guys. That's half. So basically what they're telling you is right here that every single IPO that has, in the last year, that has IPO in the last year, has lost probably half of its value, guys, if not even more, okay? So that's what you're seeing over here. Now, compared to the SPY ETF, right, you can see that the SPY is only down 15.23% this year, all right? So a lot less when you look at it, comparing it to IPOs and all that. Now, I'm not trying to discourage anyone from participating in IPOs. Obviously, I love IPOs. I love looking into them and all that. My channel is all about IPOs. But I just want to make sure that I point this out, because I see a lot of people losing money, a lot of people losing hope in IPOs, and a lot of people losing money on IPOs that they don't know anything about, that they shouldn't be buying to begin with. So that's why I always tell you in every one of my videos, make sure you do your own research before you get into these companies. All right, guys, and that was 5 problems with IPO stocks right now at this time. Did I miss any? Let me know in the comments below. I'm sure there are more problems out there. We have a lot of Hong Kong companies that are coming into the US and selling ADS, or American Depository Shares, and they are popping and then crashing, okay? So all these companies that are coming from abroad that are filing F1, a lot of people are actually buying and selling real quick, and a lot of people are left behind holding the bag, and I don't want that to be you. So make sure that you set up those limit orders. Make sure that you always know what to pay, know what you're willing to pay for all these companies. Forget about the hype, forget about everything else, forget about what I'm saying or anybody else is saying. Make sure that you do your own research so you're not left behind and you lose money in the stock market. But guys, I just want to bring you this video real quick to be transparent. I do have an IPO portfolio that I buy. If you want to see it, make sure you go down to Patreon. I'm also have a dividend portfolio where I put most of my money into, right? Because I like to buy new companies, but for the long haul, I also like to, invest in dividend companies that have been proven throughout the years. So anyway, let me know what you guys think in the comments below. This is not investing or financial advice. So let me know what you guys think. Make sure you do your own diligence. But more important than that, guys, make sure you take care of yourselves. And I'll see you soon.
I bring up the pain, Rick is the main. I make the market rain like acid rain. An investing channel you ever know, ya. I think you'll go your house, your money, leave you broke, son.